Hello YouTube. It's going to be a bit quiet because it's late. In this video I want to talk about a spreadsheet I banged together. Well, not banged together, I put a bit of effort into it, but that represents a kind of simulation or emulation of what the principles behind trading or lending, I should say, on platforms like Bitconnect is, how the financials of it work, how long it can go for, and why they can do it for, say, a year or even maybe 2 years, but then why long term there's a point where it just plummets. Now, to start with, if you're not aware of how Bitconnect loans work, the idea is that to get a loan with them, you will sell BCC back to them, and you will get the USD value of that of BCC, the BCC you sell to them at the time, as the principal of the loan, and then over the term you'll be getting a certain amount of interest. So if you had one BCC and you sold it back to them as a loan today, I don't know what the current market worth of them is, I think it's 300 and something, let's just say it's $300. It'd be a loan of $300, and at the end of the loan term you'd get that $300 back, and over each day of the term up until that point you'd be getting a bit of interest on the principal, which if you look on the Bitconnect side, it varies between 0.5% and 1.5% roughly, at least currently. And the thing is too, that you can buy BCC from Bitconnect at the current market rate as well. So one of the things that's interesting about that is that if you make a loan on Bitconnect by selling your BCC back to them, they can then take that BCC you just sold them and sell it to someone else, meaning they can cycle BCC over and over and over and keep selling it to people and creating loans and basically profit off it recursively, meaning it's they can, with the circulating count of BCC is not a limit to how much they can sell it. They can sell it as much as people want to buy, which is a very good model for them if they want to make money in the short term, but it does have long-term problems. We'll get into that. Anyways, that's how Bitconnect and BCC loans work. So a few figures of note for my simulation. On Bitconnect, the shortest loan term you can do is 120 days, but that's only if you do quite a large loan. For most people, the terms are going to be, well over 200 days. The term for the lowest loan amount is 299 days. But for my simulation here, I've just made it flat. The terms are 150 days. The only difference it makes if the terms are longer or shorter is it dictates how long the platform can coast without paying anyone's principals back. So what I mean by that is that if you have a platform where the loan terms are 150 days, for the first 150 days of that platform's existence, they haven't yet had to pay anyone's principal back, their initial investment, because nobody's term is finished yet. So in that 150 days, they're only paying the interest on it, which is significantly less. Now after that 150 day mark hits, all of a sudden they start having to pay back people's principals, and at that point that's when their debts first start to truly catch up with them, and at that point in time the patterns start to change. Now this is noteworthy in the case of Bitconnect, because when you consider they've been around about a year and 2 months roughly, and their loan terms on average are probably about 250 days, meaning the first 250 days of their existence, their debt, they weren't really having to truly pay any of the debt yet, they were only paying interest. So for the first 250 days of their existence, it's not in the least bit surprising that Bitconnect would have been profiting from all the loans going on. Now after 250 days it starts to reverse and catch up with them, but they can still ride it for a significant amount of time, and we'll talk about, as I go into the spreadsheet results below, we'll talk about why that is and how that is and how long they can do it. So in terms of what I've got on the spreadsheet itself, I'll try to avoid getting too detailed, but it's important that I explain what it is, otherwise it just looks like I'm throwing numbers at you and pretending to be smart. So here I've just got a little ICO calculation I did. So if the ICO token value was 15 cents, which I'm not sure if it was, but it doesn't really matter whether it was 15 cents, 50 cents, we're representing the underlying principles, the specific, it still plays out the same, just in slightly different time spans. But their initial token sale was 4.8 million tokens at 15 cents each, as far as I'm aware, and that adds up to them profiting off the ICO sale, $720,000. So the initial holding that Bitconnect has, the initial money in their bank, is $720,000 on day zero, we'll call it. And that's what this holding column is, how much money Bitconnect have in the bank at any given day. And on the very left you can see that the day count goes up, so as you can see here as I scroll down, I've basically got a row for every day based on these mathematics. Now, something I should mention is that beyond building this around the idea of 150-day loan terms, I've also built it around just an average of 1% interest per day. Now obviously Bitconnect's interest varies, but from what I can see that's roughly what the average is like, sometimes higher, sometimes lower, but it's good enough to present the principles of this. Now, one way Bitconnect could extend their lifespan beyond what this simulation will show is by drastically lowering their interest rates at the end of their life cycle, but that's a death knell of its own kind, because then people start to earn way less and start to be less and less happy, and that has negative effects as well. You know, if Bitconnect interest rates suddenly started to drop to 0.1% every day instead of 1%, the value of the tokens would go down, so it has its own consequences. But for the sake of this simulation, we've left that question out of the equation. Consider it homework. You can think about it yourself, what the ramifications of that would be. So going back to what we've got here, so we've got rows that, you know, day by day, a row per day. This first column here is just a rough calculation of what the circulating supply per day would be based on their figure of the tokens expanding in supply by 120% per year. That's the figure they've thrown out for their staking algorithms. This actually didn't end up being that relevant to the rest of the calculations, which is something I thought might be, but the more I understood what I was trying to calculate, I realised it's not that significant for the estimates I'm doing. And then these loan columns here basically represent, you know, a guesstimate, you could say, of how much are people loaning in Bitconnect per day. How many new loans are being created per day? Now this is a very arbitrary figure, but it doesn't matter that much, because even if the real figure is twice this or 4 times this or half this, it's still, the whole model still ends up playing out the same way. It's just a question of how long does it take. And even if the figures were double this, but if they were consistently double this, then the time spans actually stay relatively the same because the ratios are the same. I won't get into too much depth about that, but my point here is that whether or not these loan guesses are accurate doesn't really matter, at least not in the not super precise sense. It just matters whether they're a rough estimation of what it might be like, which, you know, I think it's fair to say they are. I've kind of made the estimate of it, you know, this calculation is like an aspect between a percentage of the circulation and a factor of the current BCC value, which in simple terms means I wanted the loans per day to be going up as the value of BCC goes up, because that represents high popularity in the platform, but I also didn't want it to go up unrealistically. And the other thing too is that as BCC goes up, then the amount of BCC people would be lending would be less, but the value of what they're lending might be more. But it's not a perfect calculation, but it's good enough for illustrative purposes. So that's that. This next line here is just the representation of the daily loans in USD versus BCC, so they're the same thing except just different currencies. And this loans column here is representative of the cumulative loans, meaning on day 1 the loans were 59, on day 2 the loans were 59, so at that point we have a total of 119. So it's just adding it up over time. You can see this keeps getting bigger because it's adding all of these up. So this is the outstanding loans at any given time. So in this model on day 50, Bitconnect has a loan total of $3 million in this model. I've also done a rough model of the value of BCC, so that's what these columns are. This is the value of BCC and this is the percentage at which it's increasing daily, and I just tried to make it roughly match the BCC values over the past year. It's nothing too crazy, but it's basically just starts at 15 cents. By about half a year it's up to $50, which is what happened, and then it also reflects getting up to $400 after about a year or a bit less. So that's that side of the model. Here, as explained before, this is what Bitconnect currently have in the bank. Now this column here represents their total debt to, well, you the investor, and to all investors combined. And as you can see here, it basically just matches the net loans, at least so long as none of the terms have expired. So at this point, there's well, before I get into what I was supposed to say, these last two columns here are the repayments. So this is what in this simulation Bitconnect is having to repay per day. And you can see, so this was the interest. So this is like 1% of the net debt. So you can see it's $595, which is 1% of that. So this would be for the first 50 days. These are the figures they're having to pay back daily. And also notice in these amount they have in the bank, these repayments are getting subtracted from these figures here. So this is a representation of what they have in the bank after they've paid their debts for that day. Now the thing with this total debt here matching the total loans over here, that's only true until the terms start to expire. So 150 days is an important milestone because that's the point where the first loan terms from day 1 have started to end. So at that point, Bitconnect starts having to pay back initial principal. So all of a sudden, on day 150, they were owing $330,000, which is 1% of the 33 million total loans they've got up to at that point in this simulation. And then the next day, all of a sudden, there's an extra 60,000 that they're paying on top. Now, where does that figure come from? Well, 59,000 here is the amount that was loaned on the first day, as you can see there. So the idea here is that now that they've reached this point, every day they're paying back the capital of loans that happened 150 days ago. So instead of just paying interest, they're now repaying capital plus interest. Now that I've explained all of that, which I hope made sense, it's a lot to take in. If you've had trouble following it up to this point, just maybe play back my video again from the start and just pause it at each step and take the time to understand what I'm meaning by each of these pieces of data. It's not that complex once you get a sense of it, but because it's a spreadsheet that I've built and this is the first time you're seeing it, it can be a bit confusing, so I understand that. But it'll help you understand what I'm about to talk about now, the results, if you understand exactly all the principles I've just gone over in the last, 14 minutes, kind of long. Forgive me for that. So anyway, that's that. Now, what does the simulation end up showing? Well, firstly, as long as they're not paying back any of the initial capital, and as long as new loans are coming in, Bitconnect's savings in the bank are going up every day. Every day they've got more. So, by day 50 they've got $3 billion in the bank, and that's after doing all their daily interest things. So, at this point in time, they're profiting. In the early days, they're profiting. This is also exacerbated by the fact that BCC is going up in value. So, it's $1 instead of 15 cents. So every time they're selling BCC to people. So let's say yesterday they bought BCC, people made loans and sold the BCC to Bitconnect at $1.03, and then the next day they sell that same BCC back to new lenders or new buyers for $1.07. So they've just profited 4 cents per BCC in a day. So part of the profits they're making are not just because of new loans coming in, but also because the value of BCC is rising at that time. But anyway, for this first 150 days, they're profiting. They've reached the end of 150 days with 20 million in the bank. And like I said, 2 factors feed into that. The fact that in that first 150 days, BCC has shot up in value to $50. So they're profiting just off the constant buying and selling of BCC, because BCC keeps going up in value, so they keep escalating what they're earning from it. And they're also doing well because they're only having to pay back people's interest. Now, let's suppose this growth here to $50 in half a year is very extreme growth. So at this point what I did is I put the percentage a bit lower, so we can, to match what actually happened in the year, because 50 from 15 cents is like what is that? 10 times, 100 times. It's like a 200 to 300 times increase, whereas from about June last year until November, December last year, the value went from about $50 to $400, which is only about, I think, an 8 times increase. So the percentages obviously slowed down of the currency's increase. So, here we have the gains of BCC value going lower. And we also have the fact that now Bitconnect is starting to pay back capital. But one can see, so each day they're paying back, this day they pay back 63,000 plus 455,000, that's about $500,000. And then the debts at this point are 45 million, but they're still profiting 26 million, 27 million, 27 million. And the reason they're profiting again is because they're making new loans daily. So in this case, they're making better loans of about $1 million a day. And these might be overestimates, but like I explained before, they illustrate the principles. But still, because BCC is going up in value, it's still profitable for them. Now, I make this keep happening until BCC gets up to $400, like it actually did. And at this point, they're still making money. They've got 100 million in the bank. So by this point in time, Bitconnect's built up a big buffer. And that's exactly what would have happened up until, as long as BCC kept rising, as it did until about November, December of last year, BCC has just been riding it all the way to the bank, because they keep reselling it to people for new loans, and that's more than that profit from the appreciation of BCC is more than enough to outweigh their debts, their daily debts. But here's something interesting to look at. On, say, day 300, which would be, say, November, December last year, let's say by this model, BCC has now earned $100 in the bank. Oops, give me a second, it's going to edit the cell. But look at what their debt is. Their total debt to investors is $337 million. And this is actually an important pattern to notice in this spreadsheet in general, and this is an actual thing of how Bitconnect operates too, which is that at any given time, they owe people more than they have in the bank. They are always, their net position of debt versus value is always in debt. They are always in debt, and you can't be in. You can try to be in debt forever, but eventually, people want their money back. But anyways, but as long as they're profiting off it, they can still keep this model going, because people are getting their payments back. So in that sense, what I said, I guess what I said was slightly inaccurate actually, because as long as they're profiting off it, and they're able to pay their daily debts, it's still sustainable. But anyways, let's suppose that around the time BCC starts to hit 400, it stops to rise. Now BCC may go up further, but at some point it will hit a plateau, just like any cryptocurrency does. There'll be some ceiling it will hit where its appreciation will just slow down. it already has, as illustrated above, between the time when it got to $50 and when it gets to $400, the ratio is a lot lower than the initial rises. But let's suppose, for argument's sake, that BCC stops increasing at $400, which has started to look like it is. Like, it's gone up to 400 and then down to 300 and then up to 400 and down to 300. It's flatlining a bit. So what happens to the financials of Bitconnect if the value of the currency flatlines? Well, first thing of note is you can see here their profits slow down. So up here they were making about every 2 days they were making about $1 million. But down here, as the gains on BCC are limiting, it's taking 4 days to make $1 million, 8 days to make $1 million. Their profit's getting lower. And the other thing of note here is that their repayments, so the interest they're repaying daily is higher than it was, but it's kind of a linear increase. Well, so is the capital, they're both linear. But the point is that the amount of repayments they're doing each day are also getting a lot higher. At this point on day 300, their daily repayments are, about 4 million? But they can afford it because their daily new investments are 4.7 million. So they come out at the end of the day with about $700,000 ahead. And that's why they're profiting. I should have pointed that out actually, that their daily profit, at least in terms of how much they have in the bank, is the value of the new loans that are made versus the daily repayments. So for BCC and Bitconnect to be sustainable, the new loans made daily have to be higher in value than the repayments for that day, which basically just means they're paying their debts with new debt. And it shouldn't take that much brain power to realize that that's problematic. Anyways, so at this point we have BCC flatlining. So let's see what happens if BCC just stays, and we'll be optimistic. We're not even going to simulate BCC going down in value. We're just going to act as if BCC stays at this peak of $403, that it just maintains its value, which is quite idealistic and not realistic at all. It's more likely that it goes down to some lower figure like $200, $100, but we'll pretend, just so that people can't try and say that I've not been accurate about this or not been fair about it. So once BCC starts to flatline, as I was pointing out, their profits get slower. But look at this. The longer this goes on, because their debts are piling up every day, but the loans they're making, now that BCC is not going up in value, their loan amounts per day are not getting that much higher. 5 million here, 5,150,000 here. But the repayments here, what's that? 4.7 million versus 5.7 million. So on this day, their debts are 5.7 million, but their new loans are only about 5 million. So they're not profiting anymore, at least in terms of what's going to the bank. And this, the important thing to understand here, because I know I'm throwing a lot of jargon at you and blah blah blah, but the important thing to understand here is that the second BCC stops going up in value, this is what starts to happen. The old debts start to catch up with them and outweigh the new debt that they are creating with new loans, meaning they can no longer keep paying their old loans and they start to lose money, or at least they're no longer breaking even or better on their old loans. So at this point their value starts to go down, and this turnaround only starts to happen about 320 days in. So this is an example of why something like Bitconnect can keep going strong for a year, or no problem. It's not even surprising that the model can last that long, because it's built into it. It's built into it because of the length of the loan terms. If the loan terms were much shorter, it's a different story. Then it catches up with them proportionally quicker. If their loan terms were 30 days, then it can catch up with them in half a year or something. And in fact, that may be something I should analyze with a platform like Octoin that I'm in and I tend to talk highly about, because that has the shorter loan terms, which may be an indication that they cannot last as long as a Bitconnect does. Anyway, so back on point, because I'm getting long-winded. So at this point, they're losing money daily, more and more. Their net holdings are going down, but it's taking a while. I mean, they've built up a lot of money by this point, 100 million or whatever, but it's going down. You know, we're at the year mark, we're down to 50 million. We've just lost 50 million over 30 days. So this is what happens when it starts to come back around to them. They start to lose a lot of money fast. But the investors don't know that, because, hey, they're still getting repaid their daily interest, right? They don't know anything's wrong. Maybe, and that's why the value of BCC hypothetically could stay static at that point, because at this point, the only people who know something is wrong are either those who've done the maths or those who own Bitconnect and can see these net figures, what the total debts are and what the total new loans are. But you, the user, do not know how many loans are made daily and how much debt is owed daily. Anyways, the further this goes on, the worse it gets. And look what happens. Day 384 in this simulation is the point at which they can no longer pay their debts. They're bankrupt. And at that point, nobody's going to get paid anymore. Now, realistically, Bitconnect will stop paying loans or significantly lower their interest rates far before this. In fact, the most reasonable time for them to do it is around here. The second they see they're starting to lose money, that is the time for them to put on the brakes, because they don't just want to lose their money. So, that would say that somewhere around the 320 to a year mark, 320 day to a year mark, that's when Bitconnect starts to be in a difficult position. Well, actually, because Bitconnect's loans are longer than this, so this is a 150-day model. In Bitconnect's case, with the longer loans, they probably will hit this point closer to the 450-day mark. So that means they could have until about the middle of this year, if BCC doesn't start going up again, until their debts start to catch up with them. And then all it takes is a few months before it kills them. 320 days to 380 days. That's, what is that? About 2 months. So it would be fair to estimate, if BCC doesn't keep going up again, that by the end of this year, Bitconnect is dead. Now, what can stop that happening? Well, item number one is that BCC keeps going up in value. But what else can stop it happening? Well, let's look at what Bitconnect just did recently. They created the Bitconnect X platform. And what did they do with that platform? They are selling the tokens at $50 a piece, and they're selling millions of them. I think the figure I estimated that in my calculations was that their ICO would add up to about $500 million in total if people buy all the tokens. Now consider that for a moment. Because about the point where Bitconnect starts to get in trouble, maybe they are about $300 to $400 million in debt. So here's a question for you. Why would they create an ICO where the initial token prices are so incredibly high? Or maybe this is why. Maybe it's so that they can get on top of the crazy debts that Bitconnect has created and that are starting to catch up with them, and they can somehow keep the platform going for longer. Now, mind you, this all raises the question of, well, why don't they just exit scam? Which, if would be a logical alternative at this point where they're at their peak. Why not just disappear on people and stop repaying interest so that they get their money and run? Well, that's a complicated question. Part of the problem could be that Bitconnect is so public that the people behind it are probably known entities now to governments and so on, so it may not be safe for them to just exit scam. They may get caught if they do that, so it's actually a very complicated situation. The people behind Bitconnect have gotten themselves to this point because the amount of debt their platform will have built up is large. The amount of publicity their platform has is large, so it's not like they're just some small little crypto platform now. They're big, and if they go down or if they scam people, that is very risky for them. It could really, land, who knows? I don't know how these things can work, but it's not unrealistic to think they could, if they get caught, they can end up in jail or something crazy. So, it's no joke. So that could be one reason why they're not just taking the money and run, why instead they would be doing these things like Bitconnect X to try and turn it around somehow. That's partly hypothetical, but that's what the mathematics would imply anyway. So, anyway, I've rambled on and on for about 30 minutes, but basically the point I'm illustrating here, if I were to summarize, is that when you take a platform like Bitconnect and the model it operates on, if you have loan terms of 150 days at roughly the interest rates they show, you've probably got a bit over a year with the amount of appreciation of BCC token value that has occurred. You've got a bit over a year before you start to get fucked over. Now, in actual Bitconnect's case, as I said, because the loan terms are higher, you've got maybe a year and a half. So this, based on this simulation I've done here, here's what my predictions are. My predictions are that Bitconnect may already be in trouble and have the debt starting to catch up with them, or at least they see it coming, hence why they've created Bitconnect X. And my further prediction is that by the middle of this year, Bitconnect is probably in significant financial trouble, but it may not be visible to you, the outsider, yet. It may just be something that's internally known, meaning because their debts are outweighing their daily loans, they're losing money on repaying them at that point. And then in a year from now, I'm inclined to predict, at least based on this simulation, that Bitconnect is probably gone, unless something drastic happens, such as BCC going up in value to $4,000, or them using a platform like Bitconnect X to bring a bunch of extra money in that can pay off their existing debts. But aside from possibilities like that, I don't see a way that they can be around in a year from now. Now, I could prove to be wrong about this. I'm not saying I'm infallible. I might have misunderstood the problem somehow or made a miscalculation here. I don't think I have, because I've been thorough about it and I wanted to understand earnestly what the figures is. This isn't about doing a propaganda piece. This is about me wanting to actually understand, figure out what the numbers are like, and then share it. But yeah, unless I've grossly misunderstood and miscalculated the problem, which seems unlikely to me, or unless there's just, unless that, I just don't see a way they can not be completely in debt and unable to pay it back in a year from now. So yeah, that's that. That's my explanation of why Bitconnect is unsustainable. There's another factor I got to mention, which is that this estimate of daily loans, there is one way in which that's relevant, because the other thing that can keep Bitconnect going longer, and this is why it's a pyramid scheme, you could say, is that if more and more people are getting into Bitconnect, that's another way in which their daily new loans can outweigh their existing debts. So that's why these lending platforms use a pyramid model in the first place, meaning leaders and referrals underneath them, and this whole hierarchy of users under users under users, because they want to encourage people to get as many people investing in this platform as possible, because those are the three factors that keep it afloat. Well, I forget if it's two or three, but factor one is if BCC tokens keep going up in value enough, that keeps the platform afloat. If there's enough new people making loans per day, that keeps the platform afloat. But it has to be growing all the time. So BCC value has to keep going up forever for the platform to last forever. New loans per day have to be getting higher forever for the platform to last forever. And that can't happen. So the second these things stagnate, the BCC value or the daily loan amounts, comparative to the built-up debt, the platform starts to turn around and collapse. And, to anyone who's really thought about it, that's obviously what is going to happen with a platform like Bitconnect, because they talk about there being a trading bot and this kind of thing, but I guarantee you, there's no real trading bot, or at least there might be some shitty thing they've tacked together to say they've got a trading bot, but there's not a profitable trading bot, and I talked about that in one of my older videos. But anyways, getting back to the point, I predict Bitconnect probably can't last another year. Could be wrong, but the mathematics at least imply that. Or it could be they might last another year because they're longer loan terms, but I definitely predict they're not around in 2 years. I just don't see how they can be around that long. At that point, it's just it's caught up with them way before that. So yeah, for those of you who want to think that Bitconnect is this magical thing that can go on forever, well, do you believe in Santa Claus and the bunny rabbit, Easter rabbit as well? Because hey, those are cool fairy tales as well.